Russ. Hey, nice to see you again. Happy New Year, Russ.
Thank you for having me.
How was your
New Year's
money, right? And you're an angel investor, so
yes.
I'm really excited, to break down the topic, what it means being an angel investor. I think everybody has a story, right? What's your story, right? Where you come from? What's your background?
Banking and finance. I've been banking finance all my life. Did a lot of project finance and way back in the day, and did a lot of development in Southeast Asia. And we've been investing since the first bubble. We needed to diversify our portfolio a little bit and take on a little more risk. But kind of wanted to do something on the angel level and kind of have fun that way. So I allot a certain amount of dollars every year for investment. So we've allocated about $350. It's very small, about $350,000 a year. Yeah. Over the next, minimally 3, but 5 to 7 years. Right. I think it takes that long to kind of see efficacy, demonstrate efficacy, and see a return on your investment base. So with only $350,000, if you're investing that on an annual basis, you need to diversify that among a whole bunch of different companies. So we rely on what we know and what we've invested on in the past and what interests us. So there are a couple of areas that we have developed a framework. Again, I'm open to other things, but at least for my efforts, we look at fintech, cannabis, real estate, and educational technology, edtech. Okay. So those are 4 areas.
Again, key takeaway for entrepreneurs is always understanding who is the angel investor you're talking to, right? Right. What is the background? Because the background is like the logical consequence on what you're interested, right? Then there is the part of passion, right? And then what's going on the market in general.
I used to be a little more antiseptic about my approach in that if the numbers were there, if I could get my head around the numbers, the market opportunity, the go-to-market strategy, the skill set of the founders, I thought that was enough. But I think it's very important to, and it may sound like a cliche about the people aspect, it's tolerance. It's flexibility and communication. Okay. I think that when I find founders who are, everybody's a little proprietary, and everybody's really, especially when it's dealing with some major technology or it's so I understand the need for kind of secrecy or kind of they want to hold on to it, but if you're not going to open the kimono all the way, I can't help you. Yeah. Or it's not going to induce me to make an apartment, make me part with our tolerance for your team.
For the team.
Yeah, because you have to work together with a small team day and day, a lot of hours. As long as you can, what you learn in college, agree to disagree, but not all adults can do that. I find. It's my way or the highway, which isn't wrong. It's just that's not who I want to invest in. So the use case that I can share is an investment that we made into a foreign language learning startup.
You can mention the name or
Storyworld. Storyworld.
So Storyworld?
Yeah.
Okay.
The founder, Cynthia Barbera, is an immeasurably qualified, immeasurably experienced professional in educational technology. She has C-level operating, mergers and acquisition, program development within the educational book publications section. She has Tier 1 market New York media, a TV. She has cable experience and all of the work associated with accessing verticals, accessing for it and to sell their products within these different markets. Amazing and an amazingly resilient and tolerant person. Her experience and her people want to work with her, and her track record has shown that. She has a like-minded CTO who is again immeasurably qualified. And there are lots of smart, talented people out there. Don't get me wrong, but just the holistic approach to development meshes really, really well with a founder who can direct, and it's that antagonistic relationship between engineering and marketing or sales, right? They both are able to bridge that divide elegantly. They don't always agree, but to bridge that divide in an elegant non-confrontational way, and then they can agree on priorities or not about what needs to get done, first or when. So that kind of team is hard to find, and I feel so lucky that I was able to find such an amazingly resilient, tolerant, respectful team. I end up gravitating to A round, actually.
Okay.
So another example of an amazing team and amazing product was an A round that I was part of, Trusted Insight. And Trusted Insight is, they've just taken off. But again, it's the management team is so conciliatory. It has a very holistic, very healthy atmosphere within the company. They're based in New York, and again, they are essentially the AngelList for institutional investors. Mm-hmm. So LPs on a very large scale, large venture capital firms, mm-hmm. private equity firms, are accessing the largest family office, the mm-hmm. largest institutional money mm-hmm. To fund their new fund. It's easier to do your due diligence with that type of company because you're already seeing demonstrated traction. You're already seeing revenue. You're seeing what might be working, what might not be working within the management team.
Right.
So it's an easier investment, sure.
And how much is ratio in this, right? What's your take on that, right?
It's always my gut.
It's always your gut.
I get approached by a lot of startups. I'm a little more active, I think, than most angels. I think a lot of angels want to kind of put a little protective barrier around them because they don't want everybody approaching them.
Right.
I'm a little easier. I'll talk to whoever interests me.
Okay.
And I'm very straightforward about I don't want to talk to you.
Right.
So I think entrepreneurs expect that.
Yeah.
I think you go in expecting a no.
Yeah.
Kind of thing. So it's fine. But it's not that it just doesn't fit with me for whatever reason. So there are many angel groups at this point, and they all I think entrepreneurs should definitely try to access those groups.
Okay.
I get approached on AngelList. I'm an AngelList investor, and I participate in several other angel groups, and each one of them have ample opportunity for public events where entrepreneurs can come and meet angel investors. So it's you gotta have your 30-second pitch down, because if it's just at the getting a cup of coffee at the lunch line or something, you better be able to do that.
So, and enchant, right?
That's right.
Okay.
Something has to tweak.
Right. So and
AngelList is great. If I find something, I can syndicate it.
Right.
On AngelList.
Okay.
I have.
So you play with syndication?
I have a group of friends who may or may not invest. Mm-hmm. Depending on what their criterion is. Mm-hmm. They know what I invest in, and I know how much they want to invest. You just kind of understand everybody's investment criteria, and if it's something, and then there's a public piece of AngelList where it just goes out and people invest. I think there are it can be as small as $1,000 for some deals.
Right.
Or larger. Yeah.
Mm-hmm.
You can do it publicly or privately on AngelList.
Okay. Right.
Syndication if it's in banking or venture capital or angel investing, it's you have more than one investor to be able to help with the whole round. Mm-hmm. If you're raising $1 million, I don't have $1 million to put into one deal, so I have to have other people to kind of go with that. I may lead a portion of that syndicate. Right. I may lead a syndicate for $250,000 of that $1 million, and then then my buddies and whoever and other public people will just invest into my lead. So far, I'm always leveraging somebody else because you need a certain amount of money to get to the next level, right? And especially at a seed round. And even if I did invest, and they don't get the rest of it or a certain critical mass of it, it makes no sense for me to invest. Right. So because it's not enough money. If it's a cold call, a cold approach. Just be very straightforward and upfront. I don't think that you need to make me like you initially if you're looking for an investor. So I always appreciate kind of a very straightforward approach. I'm looking for investment and hoping that you might be interested in that. Can we talk about duplicate business models in the same vertical? Okay. And so I kind of shy away from that. Okay. Like almost serial entrepreneurs, if you've run a business, successful business before, you know how to run a business. I mean, you've learned a lot of mistakes, your mistakes, so, like all of us. So
yeah. So lessons learned.
As long as so the experience has to come out for me.
The last 2 deals that you said that you didn't invest in, right? What was your key reason why you didn't put money in?
The people.
Right.
I think when you meet somebody, you if there's a purpose for the meeting, it takes in the first 30 seconds, if not less. I think you kind of have a gut feeling. So yes, a gut feeling, and then so I can't really just say after 3 meetings I know. It's kind of your gut immediately.
Yeah.
And then you go and prove yourself wrong.
Okay.
And I wasn't able to prove myself wrong.
Okay. So
Yeah. I try to dissuade myself from thinking that. I mean, good or bad. These guys are amazing. Well, what about this? What about this? That's what I go through in my process.
Right.
These guys are bad. Well, and then prove myself that they could be good. Either way.
Well, Ross, thank you for your time. Amazing chat, and stay in touch. All the best. Again, thank you. Thank you.